Okay, next up, we have very privileged to have for the first time Martin de Solay, the CEO of Allkem. And we are going to focus pretty much exclusively on their Canadian assets, which is the James Bay asset. I remember years ago when Galaxy was going around, they had Mount Catlin, they had Sol de Vida, and then they had this James Bay, and no one gave any thought or credit, that thing would ever get built. And here it is, you're very far advanced in engineering and you got your first federal permit. But I would argue, and I do argue, and I think David agrees, that the market doesn't give much, if any, value for your Quebec assets, and relative to how these assets are valued in independent companies, there's some hidden upside, within Allkem, for that. So with that, I'll leave it to you, David, to just ask your questions, and I may come in throughout.
Thanks, Howard. Thanks, Martín, for joining us. Maybe you can just, at a high level, bring the market up to date on where Allkem is, the James Bay process. Obviously, the first federal approval was obtained in January. I know the IBA discussion is ongoing and the permits are sort of ready to be filed, and then construction would begin imminently. Maybe you can just update us on that. I know that we're also expecting a resource upgrade or update, rather, maybe update as well or upgrade as well, but that would be by the middle of this calendar year. So maybe just high level where we are in the process right now.
Yeah, thank you very much, Howard and David. David, you just described exactly where we are. We secured the federal approval at the beginning of January for starting the construction of James Bay. We're now finalizing, crossing all the T's, dotting all the I's on the permit from at the provincial level, which we hope to obtain it soon. With that ESIA from the provincial permit, we shall be able to submit all of the early works and construction permits that are ready to file. What we are doing in the meantime is we are drilling the James Bay asset. The initial delineation of the ore body was just to prove enough reserve and resources to file an NI 43-101. We want to give it a more thorough view and understand exactly the size of the ore body and the quality that we have. As we have said before, James Bay is a great asset in Quebec in terms of head grade, in terms of very low stripping ratio, in terms of its ability to deliver to the market a very good quality product. So once we start to build the mine, we will start to work on different options for the vertical integration of the project to bring it down into lithium hydroxide.
So once, I believe you will give guidance to the public market, timing for construction here is fairly short. Once the pits are in the ground here, and I believe the last capital estimate was around 286 million. I guess, can you describe this? Is it a relatively virgin area that you're developing, or are you benefiting at all from some pre-existing things that might have happened in the area already? Bringing hard rock acid on, within 12 to 18 months or so would be a pretty notable achievement.
The initial timeline that we had to build the project was around 15 to 18 months. It's not 12 months. Yes, you cannot deliver a project in 12 months. And a lot depends on at which time the winter hits you in the construction project. So once we get all the permits approved and we initiate the construction works, we will be able to tell the market exactly how long we think it will take us to build the project. We have developed different alternatives in terms of utilizing precast concrete and prefabricated steel structures to be able to speed up the construction of the project. The NI 43-101 that was put about a year and a half ago will be reviewed at the time of securing all the permits and initiating construction. We don't expect significant variations in the capex in the project, apart from the overall inflation impact that is hitting all of the projects. Some of the activities have already been triggered, and we're already doing some works that were authorized by the permits that we had.
Sure. Maybe just for context, you can just talk about James Bay in relation to your flagship asset, Mount Catlin, which I know is closer to the end of its useful life as a mine, and you guys have endeavored to extend the mine life by 5 years or so. But the resource size at James Bay is just massive. I guess when you think about the total scale, is this a project that would have multiple iterations? Because it's quite a bit larger than what you would see at Mount Catlin. Maybe you can just contrast the two ore bodies and the advantages between the two.
We are currently drilling James Bay to try to delineate the whole ore body. The initial delineation was not sufficient, so we'll be able to tell you in terms of how many times what's the total size of this development we'll only be able to tell you once we complete the drilling program that we're currently doing. A couple of things that we know of James Bay is, number one, the quality of the asset is very good. The head grade is better than what we have in Mount Catling. The pegmatite layers, which are horizontal in Mount Catling, are almost vertical or sloped in James Bay, which enables us to access the ore with a lower strip ratio. It's about a third of what it would be in Catling. And also the basalt combination, it's completely different. While in Catling you have the basalt jointly with the pegmatites, here you have clear basalt layers that enable you to separate the basalt from the pegmatite. So it is fully funded. It's low, very, very low operational costs. And the high grade, as said before, not only improves the recovery of the plant, but also enables us to deliver more and more product to our customers.
Can you talk a little bit about the timeline between getting the first spodumene production versus chemical production? How much of a lag between the two do you see, and what's the initial plan for the spodumene project before you're converting it yourselves or with a partner?
Well, listen, we are currently working on a pre-feasibility study for the downstream facilities, and based on what we are seeing in the market, we may expect a couple of years of sales of spodumene into the market until we have our downstream facilities up in operation. And we are planning to market that spodumene to the same customers and getting through tolling agreements. The flexibility and the geographical coverage that Allkem has makes it a unique company in terms of its ability to support and serve our customers. That's a plan that we have.
Just there's a disconnect where companies are listed, and what's the makeup of their shareholders. So retail shareholders are driving up projects, and we've observed that Allkem maybe in its early days had more of a retail following, but doesn't seem to have the kind of same retail following as other Australian, companies might, which push up a lot of those valuations. But then also separately, your peers, Livent, Albemarle, SQM, producing peers are listed properly here in the U.S. I would think, I asked you this question, I don't know, 2 years ago at one of your results presentations, like, would you consider a U.S. listing? And with your now focus on North America, once James Bay gets fully permitted, I mean, I see re-rating potential for your stock by listing in the U.S. and attracting kind of retail shareholders. So from like an investor relations point of view, could you comment on Allkem's thinking on either of those things?
We have said always that if we think that there's an opportunity to improve valuation for our shareholders, we will look at it and pursue it. I think that it is important that we convey our message properly, and the market understands that we are not just an upstream producer of spodumene, we are a vertically integrated producer of lithium chemicals. I think that those better valuations come with the vertical integration of your production more than with the geography in which you are listed. But we are clearly seeing what you mentioned in the US market. On the other hand, touching on the composition of our shareholder base, we had in Recovery pretty much an institutional shareholder base. Galaxy came with a more retail shareholder base. Since the merger about a year and 6 months ago, the shareholder base has been shifting again towards institutional. So we do have a very large institutional composition in our shareholder base in Australia.
Right. So there's been a migration. Galaxy had a reasonable, I think maybe they had a higher valuation in the past, but anyhow, your asset, one thing you mentioned when I saw you at the PDAC was there's a lot of joint ownership of assets in Quebec, right? You own 100% of your asset, and it's quite sizable, 40 million tons at 1.4%. It's like it's a really, I don't know, from an equity tons perspective, it ranks probably near the top from that perspective. Also, while you're here, any indication on the carbonate price in China, which you're heavily exposed to, has fallen some 50%. Spod price, we don't really know exactly because Pilbara didn't do their last BMX auction. They told instead. But do you have any guidance or indication that, on where prices are today, given you are exposed both to spodumene and carbonate?
When we released our semi-annual financial statements, we confirmed the guidance that we had for spod and carbonate for this quarter. So we're maintaining that guidance. Our exposure is not that large to China because we sell a lot of our product in Japan and Korea as well. So we are more balanced, not just on China. The other thing I always say is these fluctuations in the spot pricing do not have to concerned a lot. We think that there's a significant growth in the demand. The demand of lithium will continue to grow. The driver for the demand of lithium is the decarbonization of the world. And when the prices were very low in the middle of the COVID situation, we continue to invest through our projects. That is what enables us to have the projects ready to go now. The Chinese spot prices are not a significant part of what the prices are composed. The market clears in long-term contracts, particularly when you talk about battery-grade product. The product has to be qualified with customers. So we are seeing some retraction in the Chinese market, and we're seeing some retraction in prices, not impacting us significantly in the short-term run. And we have to see how that continues in the next few months. The Chinese manufacturers have lost significant margin over the last 6 months as the prices have increased and they started to use idle capacity. Now, when they do the numbers for next year, that idle capacity becomes business as usual. The margins are very low because they have been shrunk over the price increase over the last 6 months, and they are trying to reposition themselves and get better margins. And there's a bit of a push and pull in the market going on at these days. But most of what you see in the spot market is not the reality that clears the bulk of the volumes that the market needs.
It may drive the stock market, every day because everyone focuses on it, but we should be watching your quarterly results and your quarterly guidance. Theoretically, the guidance that you say you're sticking to, could be higher. Can you remind us what your guidance was for the next quarter for both spodumene price and carbonate?
We guided spot prices in line with the previous quarter, and we guided the carbonate price as well as in line with the previous quarter was excluding sales-related party about $53,000 per ton for carbonate. Which was in both cases we maintained the previous quarter guidances.
Yeah. Okay, so 53,000 for carbonate, and I think it was like 5,300 or something like that for 5.3% spodumene, if I remember well.
Yes.
Okay, so 53,000 carbonate, next quarter could be higher than spot is at the day that you release it. We'll see. Okay, final question just on M&A and consolidation. I mean, you have a lot of assets under development, but you're generating lots of cash now. And, we see Quebec and Ontario, lots of juniors. It could be a space for activity. And now we're having a bit of a pullback in the market. What are your thoughts on M&A, you consolidating? And what geographies would Canada be like a first port of call for you to expand, or would it be elsewhere?
Clearly, we do have great assets in all 3 locations where we produce raw materials in Argentina and Canada and Australia. Our focus would be Canada and Australia as the most interesting jurisdictions at this point to continue to grow. We have our resources in brines are huge, so we're talking about hundreds of years of resources to produce. So we would want to put a bit more focus on the hard rock side. However, we do have great assets, as I told you before, and every time we look into a project, we are better off by investing in our own assets and further developing than that buying a new project and running all the risks. I would tell you we are an opportunistic buyer. We did acquire assets in the past when we thought it was the right opportunity to do it, and we will continue to do that. If we think that an asset will add value to our portfolio, will enable us to increase the service level to our customers and make our shareholders better off considering the price that we pay for the asset and the risks that we run in developing the asset, which I understand we know them very well, then we will do it. But I would qualify us as an opportunistic player on the M&A arena at this time.
Well, I was looking at my Mr. Market scoreboard as of the middle of this month in the last 15 months, and when I look back 15 months ago, there was Galaxy and Orocobre on it, and now it's just Allkem, but Orocobre was the surviving stock, and over that period of time, that 15 months, you have significantly outperformed. So you did merge well, and that was a full merger of a multi-asset company. So that's kind of what I'm thinking about. There are a number of advanced developers of multiple projects, that are going to be doing greenfield or brownfield, that could seem a good match. And a number of them have activities in Canada, in hard rock, right?
Yeah, listen, as you said, we just done it. We've done it successfully. We know how to do it. And if there's a good opportunity, we'll look into that.